Welcome to the WangHiro podcast, where we answer Malaysians' burning questions about personal finance with fact-based answers.
AMD is yet another company to benefit from the AI craze, but at a valuation of around 286 billion, it's just about a quarter of NVIDIA's 1 trillion. How much more can it grow and how fast? Welcome back to Stock Investing from Zero with me, Louis, and my co-host, John. We put a beginner's lens on companies to help you decide if you should invest. We do this by asking 4 questions. What do they do and how do they make money? Are they profitable and financially stable doing it? Who is their audience and how big can they grow? And finally, are they cheap or expensive? So John, let's start with the first question. What does AMD do?
They're actually a logics processor Okay, I wouldn't use the word manufacturing. Owner of designs for logic processors. Okay, I think the right term I'm trying to use is actually central processing units. The history of AMD started very, very funnily is that it was a competitor to Intel. We all know Intel because of the marketing, Pentium and all that. And they were the alternative to logic processors or CPUs within computers. And going forward, since those days, they have branched into things like gaming, data centers, and what we call embedded processing. So to give you a gist of maybe their end product, you find their products in a computer, a normal computer, a normal laptop, that's parked under this thing called a client division, where they serve just CPUs in notebooks and desktops and some commercial workstations. Then they actually bought this company called Radeon. I don't know if you've heard of them before.
Yes,
ATI, right? Gaming cards, whatever, right? So it was bought out by them, and now they have this GPU gaming division. Okay, so they have this high-end graphics card for gamings, and more they're moving into data centers as well, where there are CPUs, there are GPUs, and they call it they'll tell you this new term called NPUs, neural processing unit, because AI is based on neural networks, so it's a catchy term for NPUs. Okay, and last but not least, they call this division the embedded. So embedded means, let's just say you have a small device like a VCR player. Okay, I realize VCR players don't exist anymore. Sorry, scrap that.
All the Gen Zs will be like, what?
What's a VCR?
We need to put an overlay for that, John.
I think we should, I think even Gen Zs today, laser disc, Louis. Still remember laser disc?
Yeah.
We our time, right? I remember we used to rent a room, 30 ringgit, go watch laser disc movie.
You're so special, like if you got this laser disc, good.
Yeah, exactly. So, okay, what would be a good example? Your fridges, maybe your washing machines today, they actually have like a PC inside, because it's so intelligent, or a TV. Because TV today, all smart TVs, you can play Netflix, whatever. There's actually an operating system and a computer inside, mini computer inside TV. So these are examples of what we call embedded. So these are the 4 ways of how NVIDIA makes money. Your client division. Sorry? AMD, sorry. I keep thinking of NVIDIA now. Okay, so AMD makes money. So you've got your client, which does computer desktops, notebooks. You've got your gaming, either through a graphics card or actually a gaming module. You've got your data centers, and actually you've got this thing called the embedded. So these 4. Now, on average, they make about 20 to 30% for each division. Gaming brought in roughly about 29%. Client probably about 26%, data centers about 26%, and embedded is the smallest, which is about 19 to 20%. This is of last year. This is how they make money, actually. So I think the next question would be profitability, right, Louis? So let's see in terms of profitability, and this was actually shocking to me, because I never considered AMD as part of my investment thesis before this, because for me, prior to Lisa Su, the current CEO, AMD was a dinosaur story about to die on.
Oh, really?
Yeah, because Intel was just pumping tons and tons of advertisement money, trying to kill off AMD, and then they were taking sarcastic pun jokes at each other, and Intel was just the big gorilla in the room now. But what happened was when Lisa Su took over, uh, completely changed and revamped the way they design. That's why you see all the Ryzen processors that we have today for AMD.
Oh,
It's all through Lisa actually. Yeah, she
ah,
took quite a bold move, pivoted into like buying into Radeon and all that. I can't remember it was under her watch or the previous.
2014.
Yeah. But she came out on board 2014, if I'm not
Yeah,
mistaken.
2014.
2014. So
Mhm.
if we look at the numbers for AMD, okay, 2014. So let me stretch it back. Can you see prior to that, right? It's almost
Oh,
flat.
wow. The
You see where I'm coming
plateau.
from? So
Yeah.
you don't change it overnight. 2014, yeah, you may have some losses because you have to
Mhm.
spend money before you can make
Yeah.
money, right? And that's it, boom, 2021, 2020, 2020, 2021, that's it. You see the rise, right? Now let's look at the net profit. So net profit, net income, you see losses, 14 she took over, 15 losses, 16 still losses, 17 loss minimized. Then only 2018 it started being profitable again. Yeah,
About
so
4
4 years to turn around the company, right? And if you look at the margins, this is where it shocked me. Even at today's, that one, right? Their margins are only roughly about 3%, Louis.
What?
Yeah, so again,
Mm.
you see on the surface, you read headline news,
Yeah,
next
lor.
competitor to NVIDIA, right? All the just to give you a glimpse, they are generating 22 billion for like 2023. NVIDIA this year is going to make roughly about 44 billion. So it's double in terms of revenue, and their margins are in the high teens to 20% one, So
Wow.
you see, right? Quality of companies is
Yeah.
not just based on headlines. It's actually going into the numbers, comparing this. I haven't even compared things like ROIC and all that kind of thing, but that's probably story for another day. The next thing I'm going to check on is actually cash flow. So if you look at cash flow from operations, yeah, so they only generated roughly about 1.6 billion cash flow from operations on a revenue of 22 billion. So you're talking about less than 10%. Less than 10% operating cash flow. Because 16, 22, yeah, 1.6, 22, yeah, it's less than 10%. So again, not to say it's a bad thing. And in technology, the struggle is you have to spend a lot of money to get ahead. I just give you an indication. Both of us, we use Apple products, right? Apple ecosystem.
Yeah.
The M1 processor, how long it was built in stealth before it was released?
I kind of remember from you, I think 10 years, was it?
Yes, that's right, 10 years. So in terms of profitability, yeah, you're talking about they only had 1 year, which is good profitability margins, which was 2020 lah, the COVID peak lah. Everyone was just rushing out to buy PCs and all that kind of thing. But other than that, you're talking about 4-5% lah, 4-5%. Okay. So next question, financially stable. Okay, we got to check the balance sheet. Let's look at it. Cash and equivalent, total cash is about 3.6 billion. Okay, let me clear the rest first. From operations, net income. Okay, they've got about 5 billion in cash. And let's look at the debt. Okay, they just turned net cash. So that is in red, cash is in purple. So they turned net cash 2019 and they've maintained net cash ever since. So, kudos to Lisa. Prior to that, more debt than cash. 2015, you see, when she took over, more debt than cash. Net debt, 2017, net debt, 2018, almost on par. 2019 was net cash. Yeah, so going forward, that's why they brought it up. Okay. Next question. Who is their audience and how big can they grow? Now, obviously, you can go Google things like how big is the gaming market, how big's the data center market. I can tell you it's growing, and that's where they are having that push for the MI300 processors. And I feel embedded, even though it's the smallest portion today, will also be very interesting to watch. Why? Today, your cars are, if you look at even your Proton X50, you just imagine the amount of processing power is needed in a car. One for media entertainment, one just for handling your car handling system, one just for handling your aircon or whatever, temperature control, you know. So as we progress in a society where electronic becomes ubiquitous, because cost is, you see, I don't know if you notice, an iPhone, if you inflation adjust, is okay. iPhone is a bad example because they keep raising prices. Okay, a normal smartphone, if you inflation adjust, right, actually gets cheaper and cheaper. You know, I don't know if you realize that. If you imagine when you bought your Nokia that time, your Nokia 2230, you remember?
I don't know, but it was really cheap though. I think even after inflation, you see, back then I bought my first Nokia. I think it was like 300. Sorry, that was in dollars. Probably like in ringgit was about 600-700 ringgit only.
Exactly. Today you get a decent, I wouldn't say the cheapest, but a decent smartphone. Don't talk about the flagship Samsung or flagship Apple, right? You can probably get a decent phone for about 700-800 ringgit, right? Smartphone.
But back then the 700 was the flagship one.
True. So it should be Apple to Apple. Yeah. But accounting for inflation, I would say it just increased by a bit. So actually the point I'm trying to make is that electronics get cheaper and cheaper by the day.
The base technology, right?
Yes.
So it's like, the rest is marketing, basically. They add this tiny thing here and there, but
precisely
to get a usable phone, I think what you're saying, right, is that it's getting cheaper. It is getting cheaper.
Yes. Electronics by far, why you see today a Myvi or a Kalisa that even has push start button, these features were only reserved for the BMWs and the Mercedes in the past, you know.
Yeah.
But today, even Myvi is like fully push start, start stop, you know, and all that kind of features, right? Why? Because the ubiquity of electronics today has brought down the cost. Okay, so but because of that, what they're looking for is volume. And why is this related to the question of how big their audience is? Today, people take for granted even toys need to have electronics. I don't even realize your kid, your nephews or your nieces, when they buy toys, it must move, it must make a sound, all that kind of thing. So it's part and parcel of progression of society, you know. Yeah. So the audience is going to be really big. Okay.
Wow. It's actually a lot bigger than I first imagined. So I was like quite limited in my thinking. I was thinking maybe just computers, like
that's why. And you see, right?
Large.
We take things for granted, like we shop on Shopee. Shopee has to be hosted by a data center, a cloud center, right? Then you think about it, fulfillment. Today, you will curse and swear at a fulfillment operator or logistics player when you cannot track your parcel. When you track your parcel, what does it know? You need more scanners. You need more sensors. You need a sorting warehouse. Sorting warehouse, how they do? Barcode. You go look at smartwatches today. Smartwatches in the past versus today, you get a 500 ringgit Huawei phone. My God, you can measure SpO2. You can measure this. You can measure that, you know. Yeah. So, again, they believe, most of the experts are looking out there, they believe that the electronics market as a whole is going to be a $1 trillion by 2030. So today is about 520, 560, depending on who you ask, forecast, right? Yeah, but by 2030, they forecasted another 6 years, it's going to be double, 1 trillion.
Wow, that's quite fast in 6 years.
Yes. And in actual fact, I mean, looking at it, we discount too much because it's not even in our head. You think about even street lights. Street lights today, LED, they don't use on timer, you know, now sensors for photo.
Sensors,
all that kind of thing. All these little things, smart traffic light system, smart trolley system, parking, intelligent parking. You know, you come to KL today, I think you will curse and swear at a mall that does not have that green or red lights on top, you know, to tell you it's empty. All this is starting to turn you more and more ubiquitous. Intelligent farming. You talk about, you know, sprinklers, automatic feeders for fish, all that kind of thing, all electronics. Yeah. Okay. So last but not least, cheap or expensive, valuation. So next 12 months, this is forward. Okay. And let's see if the trailing last 12 months. Wow. At a peak in 2023, my God, they were having losses, but 6,583 PE. It's insane, okay? Even last year, end of last year, last 12 months PE was 1,245. Now it's at 335, which is still quite insane though.
It is. Wow.
So again, NVIDIA, when you look at it, NVIDIA at 63 times, it looks cheap compared to
Yeah, so I mean 300, even like 1,000 something.
So right now, it's at 335. So for me, again, don't look at headlines. Look at, go through the numbers. It's like, yeah, it's up and coming. Yeah, but it's at 300 times. Are
It's
you
just people scared they missed NVIDIA maybe. Now
Yeah,
they come into like and buy AMD.
Correct.
The next
So,
NVIDIA.
yeah, guys, you're not missing too much. So
Alright, but if there is one very like interesting news that I saw, which is this year they're projecting like 3.6 billion worth of AI GPU pre-orders. Right, this is something like I think the CEO does make a point to state. Oh, we have this much coming up in 2024. Of course, it's just not realized yet, lah. What should investors make of this kind of information?
whenever she makes actually the statement you just made is very good that you brought it up. Is usually called what we call a forward-looking statement. Forward-looking means you're trying to project something in the future about the possibility of the company growing to that size, getting that kind of fair point. But let's just say she's realistic. Park that into your valuation. That means if you put it into an Excel spreadsheet, okay, she says she's going to bring in 3.5 billion. Oh, that one, right? They did top line. Let's see, what was the top line last year? The bottom line, sorry. Bottom line last year this is debt, sorry. Income, Okay, so net income was 2.4 billion, okay? So you say, 854. So let's just say 5 years from now, they bring in 3.4 billion in terms of the sales. So 854 plus 3 point whatever billion, okay? You do the PE projection forward. Then is this still cheap? You see where I'm coming from?
Yeah. Okay, so we still crunch the numbers.
You have to crunch the numbers. If people tell you that they invest just based on a story, everyone can invest lah. Hello.
True. All right, last one before we close to the next section is how close of a competitor is AMD actually to NVIDIA?
I think still quite far.
Far.
From my reading, I mean, as I was sharing with you before the podcast, they expect to sell 3.5 billion of this MI300 GPUs, right? But when you read their latest quarterlies, there is no constraint on the supply. So what does it mean? That means inventory waiting time and the demand is not as high as that of NVIDIA GPU. And NVIDIA GPU has a 52-week waiting time, 1 year. That means you order your GPU this year, you probably get it next year. You see? So again, it's that correlation as an investor. If you want to really up your game, you have to read in between the lines, You have to learn how to read in between the lines about what is headline news and what is actually the case. You see? And like, to be honest, this is the first time I look at AMD numbers. AMD numbers, right? And I'm like, wow, 3%. Wow. I'm like
3%, that's nuts.
Yeah. You see, again, don't be fooled by headline news. And
that's true. I mean, I was fooled by the headline news because obviously there's the AI play, which is always a hot, crazy topic right now. And you're like, maybe NVIDIA's now gone too high now, but then when you look at the PE, actually NVIDIA looks really cheap next year.
Exactly.
The bargain, actually.
Yeah. And I think it's not that difficult if you have the skill to, I've just shown you in 5 minutes. I'm not to say that this is a conclusive buy or yes, no, whatever. Obviously, you have to dig deeper and all that. But I've just shown you that if you have the skills, it's not too difficult to run a 5-minute check to say, hey, is this worth my time to study more?
It's a litmus check.
Yeah, it's my litmus check. And if you even if after all this and you feel that this is like something you cannot stomach, right? Then buy the index law. What you and I have created in WangHiro, the ETF compounder, right? Is that Okay lah, I've already shown you the way to do it. And he said, hey, John, I got no time for research. Hey, John, Louis, I got no time to handle my portfolio balancing, whatever. Buy the index law, buy indexes that we advocate that, cater for certain niche, certain industry, and do that work upfront in the beginning, understand what is an ETF, understand how to construct the ETF portfolio, understand how to balance this risk, and then hands off DCA. Wonderful, right?
Yeah. So for those who want to get in on this program, our waiting list is in our description. So just make sure to key in your email. You'll get a discount from us once the program opens. All right. So I think we have a bit more time just to
Yes.
cover the investing book part. So
Yes.
what's the investing book for today?
Okay, so the book today is actually called The Warren Buffett Way by Robert G. Hagstrom. I've had the privilege of meeting Robert Hagstrom personally. Very, very lucky. I was in Berkshire Hathaway's AGM in Omaha last year, and I was seated at a conference, and suddenly I look at this guy. He looks damn familiar. I look at his tag. Oh, Robert Hagstrom. So I quickly went up to him and I just gave him a hug and I just took a photo. So what I like about Robert Hagstrom's work, this is actually his third edition of the book. I'm going to flash the title out right now. So it's called The Warren Buffett Way by Robert G. Hagstrom. And he talks a lot about the business and investing principles of Warren Buffett. So what I really like also about the book is that the anecdotes that Warren has written or shared is actually clearly manifested in the book. So you see, the problem is if you don't have the tenacity or the patience to read through all of Warren Buffett's letters, 1957 until today, right? Or let's just say the modern era of Berkshire, like 1970s until today, right? It's here. You can't piece together. You have to read through the whole thing and you understand, right? Because one year he'll be talking about insurance, okay, Gecko or whatever. So he'll list out principles about Gecko, how to do a good insurance business. One day he'll be talking about See's Candy or Coca-Cola or whatever, right? So the principles may be slightly the same, but he's giving the example. And if you don't read all of them, you may not get the whole thing. Now, what Hagstrom does very well is that all the investing principles, business principles that Warren has, he concises it into this book, and it's kind of like a flow, for the lack of a better word. It's just a flow. And once you get maybe a business tenet, he flows it in such a way that you've got a business tenet, you've got the management tenets, you've got the financial tenets. So financial tenets, I can give you an example. Is it a good way that you should do shareholder buyback? Is it a good way that you should, do capital expenditure this way? How do you sweat the asset even more in that way? Management, how do they behave? How do they align themselves to minority shareholders? And then he goes on to cover things like managing a portfolio, psychology of money. Obviously we've got people like Morgan Housel, psychology of money. That is very specialized to just psychology, but he covers this in certain chapters with a book about psychology and how sometimes people can be unreasonable. That's how he closes the book. So I feel this should not be the first read. I think first reads will be things, books like Lynch, 1 Hour on Wall Street, or John Bogle's book, about common sense investing and all that. I feel this will be a second or a third book where now you've gotten the hang of value investing. Now you want to go deeper into the concepts, advocating or trying to practice those concepts, and how does Warren practice it?
Okay, so I think this is a book that seems to be like more of a little bit more intermediate kind of book. So
yeah.
just like while you were saying that,
yeah.
while I was saying that, I just realized we should be including. We have our own article on all those books that you mentioned.
Yeah.
I'll include that link actually into the description. So at least, those who want to, uncover what books that John was talking about, you can go and click that link. Hopefully, by the time the video is up, you have the link in the description already. All right, so that is all for today. We covered AMD's analysis. Obviously, I picked this stock mainly because, there's all this AI hype, and the AMD right now actually gone up a little bit. Yeah, and a lot of price volatility around the stock, and people are thinking, is it going to be the next NVIDIA? We hope it is, but clearly there are some discrepancies that, we probably cannot do an apple-to-apple comparison in that way. So over to you, our audience. What do you think about AMD's potential, especially after John has gone through all the 4 questions? Leave them in the comments below. If you like content like this, make sure to like, subscribe, and hit the notification bell on our channel, WangHiro. Thank you again for myself and John. We'll see you again in our next episode. Bye-bye.